As markets evolve, the conversation pivots toward a recurring theme: don't trade emotions, trade structure. The instructors repeatedly caution members against chasing price movements or reacting impulsively to market volatility. Instead, they encourage patience, disciplined risk management, and waiting for confirmation before entering positions. Technical analysis becomes the central educational focus. Members are taught how to interpret moving averages, identify trend direction, distinguish between temporary pullbacks and genuine reversals, and recognize the importance of price confirmation. Rather than presenting isolated indicators, the lessons stress that multiple signals must align before a trend change can be considered reliable. One particularly memorable lesson centers on trend reversals. According to the instructors, a true bullish reversal requires several conditions to occur simultaneously. Short-term moving averages must cross above medium and long-term averages, price must reclaim important resistance levels, and the overall market structure must confirm the new direction. Without all of these elements, traders are warned not to mistake a short rally for the beginning of a sustained uptrend. The educational approach appears to resonate with participants. As the lessons progress, members begin responding with reflections rather than questions. Several express that they now understand why averaging down into losing positions can be dangerous, while others say the explanations have made their trading logic much clearer. One participant summarizes the lesson by committing never to add to a losing trade until objective bullish signals are present. Psychology becomes another major topic. The instructors repeatedly remind members that successful trading depends as much on discipline as on market knowledge. Fear, greed, impatience, and overconfidence are described as some of the greatest obstacles to long-term profitability. Unlike many investment groups that focus primarily on stock recommendations, this conversation places significant emphasis on developing a repeatable decision-making process. Rather than predicting where markets will move tomorrow, the administrators encourage members to understand why trends develop and when probability begins to shift in their favor. By the end of the discussion, the chat has evolved from a stream of market commentary into what resembles a structured educational seminar. The final exchanges consist largely of participants acknowledging what they have learned and expressing confidence that they now have a more disciplined framework for future trades. Shortly afterward, the administrators restrict posting privileges to themselves, signaling the conclusion of the session.